All right, everyone. I'm going to get started because we're at 11:31 now. Want to, make sure that we value your time here. Want to introduce Kandas Myer. She is with IPX 1031. Teresa, did you want to say anything?
Hey everyone, Teresa with Chicago Title. Kandas works for a company called IPX, and we work closely with IPX. It's actually under our Fidelity family of companies, and Kandas is an expert on the 1031 exchange. So happy to bring Kandas to you today, and please, put anything in the chat, and I'm always happy to help with whatever needs you may have. Thanks, Vandana.
No problem. Thanks, Teresa.
Awesome. Thank you. Awesome. Thanks so much, ladies. It's really a pleasure to be here. I'm glad we have a kind of a small, intimate group today, because that means we'll have plenty of time for questions. And as Teresa said, we are a sister company. We're owned by Fidelity National Financial. So, we work closely together. We're a Fortune 500 company, and been in business for 30 years, and I myself am a certified exchange specialist and have been since 2003. That is a specialty that is certified by the Federation of Exchange Accommodators, and there's only 106 certified specialists in the entire country, guys. So it's a certification that I will never want to sit for the test again, because it was a really hard test, and you have to be in the field at least 3 years before you can even sit for the test. So this is my 23rd year as a 1031 exchange specialist. And I've got up here on the screen, the sharing screen, is I want you to pick up your phone right now, because you're going to bump into a 1031 exchange sooner than later. And I'll tell you why with the numbers. My name is right there, Kandas Myer, and I want you to put it in your phone, Kandas Myer with that same space, 1031. Because I guarantee you're going to forget my name probably within 2 hours of the class, and you'll forget the name IPX 1031 Exchange. That's the company we work with. And I want you to put my number in there, 775-721-4190. And then my email address is my name, candace.meyer@ipx1031.com. And the reason I do this is because, guys, we have record numbers of 1031s coming in. Record numbers. I mean, who knew that a pandemic was going to light a fire under real estate for all of us, right? Wendy's laughing. I mean, Teresa's laughing. I mean, the escrow officers are burning the candle at both ends. I mean, they're sending me stuff at 8 o'clock at night, guys. It's crazy how busy it is. In 1031s, we've literally had record numbers in June, record numbers in July. We only slowed down for about maybe 5 or 6 weeks right after COVID happened in March, when the country started shivering and people, states started shutting down. Real estate got sluggish there for maybe, 5 weeks. And then all of a sudden, it was like somebody opened the floodgates. And 1031 has been just bursting at the seams. Everybody and their brother, I can barely keep up. So the reason I'm giving you my name and with the numbers 1031 is because you're going to bump into a 1031 client, whether they need to sell one on a 1031 or buy one, and you don't want to get caught flat-footed. And here's why. A 1031 exchange is almost always going to end up getting you multiple commissions. The reason why is because a 1031 exchange is a tax code with the federal government, and it enables an owner of investment property to sell one investment property and not pay any capital gains tax that they would have had to pay Uncle Sam. The way they get around paying that is they use an intermediary, which is what our company is, and they sell the property, and then they turn right around and they buy 1 or 2 or 3 or more of equal value. Okay, you heard me right. If you have a 1031 client, they're going to do a minimum of 2 escrows. Often they're going to be in the same city. Half the time they're buying and selling in Las Vegas, or they're buying and selling in the same city that they are in, or 40% of the time they're selling in California and they're buying in Nevada. And when that happens, what is happening on our end is that seller that's selling in California they're buying multiple properties here because the California property is so much more expensive than our property here. So they're buying, 2, 3, and sometimes more. I'm going to give you, I got so many stories. I have an hour presentation that I call multiple escrows, same client. I've got a cajillion stories. I'll just share one with you. John, his name was John. He sold a $2.5 million condo on Fremont Street in San Francisco. Okay, 2 point something million dollars. He came into Nevada and he used the same agent to buy 6 single-family homes. 6, guys. He paid cash for them. And in John's mind, and I facilitated the 1031 with John. I don't take your place as an agent. We facilitate the 1031. We don't interfere with your commission at all. That's not what happens. What happens is you normally get more than one commission. So in John's case, he bought 3 single-family homes, all really nice ones, paid cash. And because John didn't want to bump up against the time frames, he wanted them all to close in the 45-day time frame. Now, they don't have to close in 45 days, but John wanted his to close. So how would you like to have been that agent on the other end of a 1031? And then you can bet when you answer the phone and John says, hey, I'm doing a 1031. Are you familiar with 1031? Victoria, are you familiar with 1031? Wendy, Jeff, you want to say, yes, I am. We have an expert right here that we can link you up with. Do you have an intermediary already? Because you want to sound like you know what you're talking about with a 1031 exchange. They have to match equal or greater value, and we'll start talking about the basics. So before I get too much further, I see we've got Jeff, and I'm guessing, Jeff, you might be on a phone or something. I don't have a picture for you. And there's a Bobby. Oh, hi, Bobby. How are you? Okay, good. All right. So you missed.
There's people slowly logging in now.
Yeah?
So I'm
Okay.
just letting them in as they come in, but just so we can let the class know, if you guys have any questions, you're welcome to ask them. There is a raise hand button, or you can physically raise your hand. If we can't see you, you're welcome to unmute. Just make sure Kandas is done with whatever thought she's on so that you don't interrupt her flow.
And you're good if you want to unmute yourself and ask a question, and then just remember to mute yourself back up, although, Dan will probably go ahead and mute you, but just remember to mute yourself back up. So those of you that just joined us, you missed my multiple escrow question where the real estate agent got 6 commissions from one 1031 client, and that is pretty common where they're going to have multiple buy sides coming in from California because the property prices there are so much more than they are here right now. So your 1031, you want to know, and if you get caught, if you can't remember my name, can't remember the name of the company, pick up your phone and put 1031 in there because you put it in there today. Kandas Myer, 1031, 775-721-4190. Okay, so now, and like I said, I got dozens more stories like that. I just shared one with you so that you understand record numbers in June and July for 1031. 40% of them are coming out of California, guys. That means they're buying 2 or more properties. In some cases, when I've got one right now, he's selling 4 relinquished properties in California, and he's coming into Nevada, and he's buying 4 to 6 replacement properties, and he's just setting up his exchange now. And it's really, so it's, these are I call them multiple offenders. They're clients that are going to end up generating more commissions for you because they're 1031 exchange clients. Okay, so let's begin, because this is kind of an introductory class to 1031. What is it? Where did it come from? 1031 is actually part of the federal tax code, and 1031 refers to Internal Revenue Code Section 1031. It's actually the 1031st section of the tax code. And what it says is that if an investor sells a property and buys a property of like kind, and those properties are used either for investment, trade, or income, that no recognition of gain or loss actually will occur, okay? So federal tax law basically is saying your investor can sell a property that they've made a ton of capital gain on and not pay any taxes to Uncle Sam as long as they buy another property of equal or greater value. Now, if they buy down in value, they'll pay some taxes on the difference, but most people buy equal or greater value. And so they don't pay any taxes. I have a handful that want some cash, and you can do a partial exchange. But I want you to know that we have a ton of investors in Nevada who have huge capital gains in their property. We have people that bought in the downturn, 2007, 2008, 2010, 2011, that they bought in the downturn, and now here we are 9 years later, and I talked to one yesterday. She has $250,000 in capital gain in the property that she's listing. So she is hot to trot on a 1031 exchange. She doesn't want to pay taxes on $250,000 of gain. Keep in mind that when you sell a rental property, an investment property, whether it's raw land or whether it's a rental home or whether it's commercial property, industrial, when you sell a property like that, you do not have what's called the capital gains exclusion like we have when we sell our primary residence. How many of you, I'm going to kind of shift our talk a little bit. Who can tell me what the tax terms are when I sell a primary residence? Who can tell me? Open it up for conversation.
I don't think anybody knows.
Okay.
That awkward silence moment where
we got crickets.
Yeah.
Okay. All right. So when I sell a primary residence, okay, there's a wonderful tax code. It's part of Section 121, where when I sell my primary residence, I get to keep up to $250,000 in gain myself. If I'm married, it's twice that, because my husband gets that too, okay? If I sell a primary residence and I've lived there 2 of the previous 5 years, I get to keep up to $500,000 in capital gain myself, okay? And my husband or whoever, if I'm married, it's up to $500,000. Guys, that's huge for primary residence. You do not have that wonderful option when you sell a rental property. So those of you with your real estate liability hat on should pay attention and go, oh, wait, there's a tax liability when my client sells a rental. If they have capital gain, they have a possible tax liability. And that's all the reason why they should be talking to a 1031 person. Okay, because they may have the ability to do a 1031 and not have to pay the capital gains tax. Guys, it's the same thing for a second home. If I have a second home, I do not get that primary residence exclusion. Okay, this is critical information for a 1031 understanding, because with you, I imagine most of you work with people that are selling their primary residence, right? Well, how many of you, just raise your hand, have listed and sold a rental property in the last year? I can't see some of you. Yep, there we go. So Victoria. So this is when you want to mention 1031 exchange, because it could be that they need to buy a replacement property. If they're buying in Nevada, great. You might end up on the buy side of that. If they need to buy in another state, you can refer them to an agent in another state and get a referral fee. Or I have another story I could share with you, but I don't want to linger on stories. I have a whole other hour presentation that we can share stories with. But you can get referral commissions if they end up buying out of state. So on a 1031, I'm going to pay taxes if I own an investment property, not my primary residence. I get a big tax break on my primary residence. But when I sell a rental property or raw land or commercial or industrial, of course, if it's not my primary residence, I'm going to be paying capital gains taxes to Uncle Sam. Okay. That's in Nevada. If I'm in another state, I might be paying taxes to Uncle Sam, and I might be paying taxes to that state, like in California. They have capital gains and income taxes in California that they charge. So the reason we've got, 40% of our exchanges are coming out of California is they don't want to be taxed by the feds, and they don't want to be taxed by California either. (1031) has been part of the tax code, are you ready? Since 1921. 1921. The federal government mandated the use of intermediaries, which is what we are as a company, in 1991. And again, we don't take your place. We don't take the place of escrow. We get added to the transaction. We don't affect your commissions except to generate possibly more commissions for you because, it's a 1031 client. They've got to buy a replacement property. So the basics are that's part of federal tax code, has been since 1921. In 1991, the federal government mandated the use of intermediaries. And IPX 1031 is the nation's largest intermediary. And we actually carry probably the most protection for our activities. We have almost $200 million in protections of insurance and guarantees and E&O insurance behind us. So not all intermediaries are cut from the same cloth. I do need to say that because, the federal government, while they mandate that you have to have an intermediary, they don't regulate intermediaries. That's kind of left up to the states. And so it's hard for an intermediary to be compliant in all 50 states. We are, all 50 states, we are compliant with every single state if they have rules about 1031. And that's an important thing. I got a 1031 recently from a client. He was actually selling here and he was buying in Idaho. And he called me up and asked for information. And then his agent said, "Oh, gee, Kandas, he decided to use an intermediary in Idaho." I said, "Okay, well, good luck." And then a week later, he called me back and said, "Well, you're back on because the Idaho intermediary is not compliant in Nevada." Okay, so it ended up back in my lap, because we as a company are compliant everywhere. So that's an important part to know. Okay, so any questions on the history before I launch into some of the other details? How many of you have already worked with a 1031 client before? Victoria, when you want to tell us about that experience, go ahead and unmute yourself. Can you unmute yourself? See, I'm not the host anymore, so I can't unmute you. Bandana's not, there we go.
Actually, it was quite a few years ago when I was working in Oregon. But yes, I used an intermediary. We did several rental properties and reinvested, but it's a great process. It's just one that you have to make sure that you don't screw up on a deadline or a date by 12:01 a.m. You can really mess up your client.
Right.
So that's the main thing, is paying attention to your dates, your deadlines, and
right.
there's no leeway, and make sure you never touch the money, all of that stuff. But,
awesome.
So anyway, it's been a while. Haven't done one since I've been here.
Now, did you have a sale side and a buy side commission yourself, or did they buy out of state once they sold in Oregon?
No, actually, they lived in town, in where I lived. So I wound up getting both sides of it. So
it was a double ender for you.
Yeah.
Awesome. So that's usually the minimum. I mean, it's more rare, I think, for an agent to not, go ahead and mute yourself back up, Victoria. So it's more rare, I think, for an agent not to have multiple commissions. I don't know where Vandana went. Maybe, okay. Anyhow, so let's move on to like kind, and we'll start talking about the rules. And what Victoria was talking about was, in a 1031, you do get some added date timelines that have to be met, and we'll talk about those in a moment. But right now, I want to talk about like kind property because it's one of the biggest questions. Hi, Vandana. It's one of the big questions that, well, not only the client, but the agent asks me. What is like kind? What does that mean in 1031 law? Like kind. Okay, if I have to buy a property of like kind, well, I've had people say, I'm selling raw land. Is it okay that I'm buying an improved property? And the answer is yes. Raw land is like kind to improved property. Well, I'm selling raw land. Can I buy improved? Well, I'm selling improved. Can I buy raw land? The answer is yes. You can buy raw land in exchange for improved property. Another question that I'm getting a lot these days, because your commercial market, some of the commercial sellers are having trouble buying because the commercial lending industry has changed pretty radically since COVID came on board. And so I've had 3 different commercial clients that sold commercial properties buying residential properties. They're buying 6 or 7, single family homes, and they've sold a commercial piece. Residential and commercial are like kind to each other, as is industrial, multifamily, any real estate. So you can see where I'm going with this. Any real estate is like kind to any real estate. It depends on how I'm using it. The only thing that's not going to be like kind in a 1031 exchange would be a primary residence. Okay, so if I'm selling a rental and I want to buy a primary residence in exchange, that's not going to defer any tax for me. That's not going to work. There are times when we can do a 1031 on a second home. A second home, very popular in Las Vegas, very popular in the north in Lake Tahoe. Second homes can be a 1031 under certain conditions. And those conditions, it does have to have some rental history. So real estate is real estate. And in a 1031 exchange, as long as I'm selling real estate and buying real estate, it's how I use it that counts, and not how, what type of property it is. The other way I can use a property in a 1031 exchange is I can house my business in it. Okay, I can buy a property that I house my business in, of course, that being commercial maybe, or I might buy commercial and rent it to some other tenants. I had one broker, she bought a really big, beautiful, expensive luxury home, and she made the top part of that property, so half of the square footage and half of the value was a 1031 exchange. She sold 3 multifamily properties to buy this beautiful luxury home, the top of which was made her corporate headquarters. The bottom was her primary residence. We can do a combination property, which is awesome tax planning and awesome property use. So, one of the things I do is I help your clients to structure and counsel how to put these things together. I call myself a duck maker, because most all day long I take calls from your clients, and they tell me what they're wanting to accomplish, and I let them know whether that fits 1031 or not, or whether we can make it work. I've been doing this 23 years now, and I've learned so many different ways to skin the cat. How do we put that duck together? We got to make it look, walk, and quack. So that's a lot of what I do is putting the duck together for you and your client. So like kind property, what is the minimum rental history? That's Teresa, thank you. That's on the chat. The minimum rental history, Teresa, is usually at least a year is minimum defensible. Some experts are going to have the opinion of 2 years, and because my answer is what it is, that particular area of 1031 law is gray. There are other areas of 1031 law that are not. For an example, if it's a vacation home, it has to have rental history for 2 years. And if it's a vacation home, that's only 14 days out of each year for 2 years, but you can't use it more than 14 days. And Teresa, if you want, I will send out, in fact, Teresa and Vidana, if you will send me the list of everyone and their email, I will send some information so that you guys have the ability to send it out to clients. So I'm going to put a note here that I'm sending you the second home flyer, because that's a big one for Vegas. So the rental history on a second home is in 1031 law, but In other areas of 1031, like for an example, I had this customer ask me today, how long do I have to rent it out before I can move into it myself? They're doing a 1031 out of California into Las Vegas. They're buying a nice home and they're going to rent it out. And the gentleman said, how long? And I said, well, a year minimum, 2 years is even better. That's where we hit the gray area, Teresa. Great question. Okay, so like kind, real estate is real estate. And, if there's any doubt, just, send me an email or even a text, because now you got my phone number, and ask me, because that's probably the most common question I get from the client. Okay, so like kind. Now let's talk about the time frames, because they do get added to the transaction. If I've got a property and it goes into escrow and the seller decides to do a 1031, like Victoria alluded to, we have some time frames that are going to come into play. So the time frame that comes into play on a 1031 exchange, it doesn't begin until the relinquished property closes escrow. When I say relinquished property, I'm talking about the property being sold. So the relinquished property closing starts the 1031 clock, and that clock's going to tick for 180 days. So the 1031 exchanger, I'm going to call your client or whoever the client is, and maybe they might be a buyer in your case or the seller. We're going to call them an exchanger. The exchanger has 180 total days to be done with their exchange. That means their drop dead time to close escrow on anything they're going to buy is 180 days from the closing date of what they sold, the relinquished property. Well, now most exchanges, as you might think, they're done way before the 180-day mark, because the first 45 of the 180 days, and this is where it becomes a little harrowing. The first 45 of the 180 days is the time period that your exchanger has to identify in writing what they're going to buy. Victoria's nodding her head. That's the one. And guys, if you've been listening with your real estate marketing hat on, what I just told you is that the client that closes escrow in a 1031 exchange is now a motivated buyer. They have 45 days to identify in writing what they're going to buy. That's a very short time frame. And most of the exchanges, they call me and ask me about that time frame. Will the government give us any longer time? Right now, they have not given us any longer time. Northern California has been given some longer time because the place is burning down. And, so there's been a national disaster that's occurred in Northern California. So every now and then the IRS will issue, temporary extensions for certain counties. And there have been some counties that had some extensions in Northern California right now. And there are some counties in Illinois because Illinois flooded lately. Okay, that's it. We've been asking them for additional extensions for COVID, and they're not giving us any. So they're kind of rigid about the time frame. But like I said, once that client sells and relinquishes the property in a 1031 exchange, that clock is ticking. They have only 45 days to identify in writing what they're going to buy. Did you have a question? Oh no, Wendy's reading the copy. Any questions on the time frame? Wendy, you look like you should be like drinking a Mai Tai with your background there. Okay. Okay, no questions, really? So identify in writing, does that mean you have to have it in escrow? Well, the answer is yes, Teresa.
So Kandas, real quick,
Yeah.
so I know you said you have to identify in writing after 45 days. So it doesn't sound like it has to be an escrow, but the end of the 180 days, the whole transaction has to be complete. All of the transactions have to be, okay.
Right, yeah, absolutely right. So what happens is once the relinquished side closes, we're going to send a form to your client saying, tell us what you're going to buy. And there's 3 blanks, so they can identify up to 3, even though they might only want 1 or 2. They can identify up to 3, so they can have some backups on that identification. Now, Does that mean they have to be in escrow? From our perspective, no, they don't have to be in escrow. But for your perspective, I always put that back on the client and the real estate agent and say, that's a real estate question. Do you think that property that you name is going to be available to you for up to the 45-day period? Because if it's not, if you think it might go into escrow with somebody else, you might want to have an offer on that property as a backup. In other words, I'm going to buy, 245 Brown Street if 123 Main Street doesn't close, and it's only going to take me maybe 20 days to figure out whether I'm going to perform on you or not. Okay? Because what? Your first choice is going to take how long for inspections and appraisals and to know whether you think you might want that property. You might want to have a contract on a second or third choice just so that you can move to that choice if you need to. Now, I am fully aware that our market is not very friendly to an offer that would be written that way. How many, raise your hand, would your seller go out, go take a flying leap, Kandas? What do you mean, I'm going to buy you if this other one doesn't work, right? Especially in a market that's moving as fast as ours is. We have a little under, I believe, 6 weeks of inventory in Las Vegas right now. So it's moving fast. And the North is even worse. They have less than 2 weeks of inventory in the North. So everything's moving really fast. What seller is going to accept that? I tell the exchanger, your buyer, and I tell the agents when they ask, if you want to make sure that second choice is there, be ready to give up earnest money and say, you know what? We're only going to keep you as a choice for 15 days or 20 days. And if we don't exercise our right to buy you, you can keep, I would start with 50% of the earnest money. And if that's not good enough, you can keep it all. We'll willingly let you have the earnest money if we don't perform. Okay? Why? Because if that exchange fails, your client, the exchanger, might end up paying tens of thousands of dollars in taxes, and it's way worth it to them to have that property in place as second choice. Usually when I explain that to an exchanger, they understand completely. And when I explain it to an agent, I let them know, talk to your client, because if they have a big, huge taxable event, it's worth it to them to put a backup property in place. If they don't want to have it in, that's their choice. But, they're the ones that are going to suffer the taxable event if we don't end up with a backup property for them. But so that's that's kind of a real estate issue. And the reason I know a lot about that part is because for over 20 years, I was an investor myself. And I've been licensed since 1993, and I did all my own properties. And so, the negotiation factor, I also know how to walk through your contracts and do all these things. I've written 6 classes and 3 credit classes in 1031 exchange. So, to help you guys walk through contract, walk through the agency part, walk through how 1031s are regulated, all the rules and regulations and basics and advanced, and including commercial contracts in 1031. So lots of information to know, but being able to lock up a backup property for your 1031 client is pretty crucial if their first one fails. And guys, I can tell you right now, during this time, because our inventory crunch has been hard, and it's not happening as much in Vegas as it is in the North, but I'm starting to have some exchangers unable to complete their exchange because in that 45-day window, they didn't write a contract on that second choice, and that property got sold to somebody else. And then the one they wanted didn't work, and then they're beyond their 45th day. And once they go beyond the 45th day, and like Victoria was saying, at 12:01 on day 46, if you haven't identified something, or the something you did identify is not going to work, you're done. You owe the tax at that point. And it's really a tough lesson. And I'm having some in the North more certainly than in Vegas are failing because they're not identifying in that 45-day window, and they're not putting under contract in that 45-day window. Now, your markets better than anyone. So what price ranges are moving really fast. I mean, if there's a client and they're buying in a price range that isn't moving quickly, maybe giving up earnest money and having it under contract isn't as important. But if they're buying in a price range, it's moving fast, then you've got to do the real estate part. You've got to be the agent part and do your job on that part and try to ensure that that property is available to them beyond the 45 days, because that's the part that hurts. Once the 45th day is gone, they can't re-identify something new. And that becomes a hard choice. But again, it makes for a really motivated buyer, in your pocket. That's who you're representing. So any question on the timelines?
So I guess it makes it really challenging if you are exchanging an apartment building for 5 single family homes, and you have to have that number match the other number, and you're looking at 5 different contracts that might fall through, correct?
Right. Well, that number on the buy side is equal or greater.
Right.
So you don't have to match it dollar for dollar, but you're right, Teresa. Like if they're, let's say I'm selling a multi-family unit and it's $500,000, and then I'm identified, 5 single family homes that were worth $500,000 and one of them falls out. Well, now I'm going to have a taxable event on that portion, unless I've identified some backup. So that's absolutely true. Yeah. Can make it difficult. And I have the most properties I have ever experienced in a 1031 for the replacement properties was 11 condos. Did we lose? Oh no, Teresa just shifted over. Okay, so 11. When they sold one property in Northern California, and they bought 11 single family homes. And I helped facilitate that exchange. And in this case, the silly exchanger, he made it so much harder for himself because he used a different realtor for each one. He went to the listing agent thinking that he would get a better deal. And I tried to tell him, I go, gosh, I can't remember his name now. I can see his face in front of me, but I said, you're making this so much harder on yourself. You should be using the same sales agent rather than going to the listing agent, because the listing agent, for number one, is the seller's agent. And so the very best you're going to get is dual agency rather than someone working for just yourself. Not that that's a big bad thing, but gosh, you did it 11 times under a crazy strict time frame. And then worse, Teresa, this was another thing, is a lot of times when people are doing with their title and escrow, I say, when you've got all these multiple things happening, if you can use the same escrow officer, do so. Because, now it's not this whole, not inventing the wheel each time. It's not a necessity, because we can work with any escrow officer anywhere in the country, but it makes it so much easier on the exchanger. If they can have the same agent and the same escrow officer, I always encourage them to do that. So that's timelines. Okay, so equal or greater value, we talked a little bit about that. They have to buy equal or greater value. So what does that mean? I'll use simple numbers. If I'm selling at $100,000, I have to buy at least $100,000 to have no tax. If I buy down in value, I'm going to have some tax. If I buy down enough in value, I'll have the whole tax, in which case the 1031 might not be helpful. Okay, so how do I know? I usually have, again, I'm structuring the duck. Is it going to look walk and quack? Is it going to defer any taxes for you? I can help talk your client through, some of that wonderment because of my certification. But when they tell me to compute the tax, how much tax will I have? Then I have to say the same thing you guys do. I'm sorry, I'm not your CPA, and I'm not allowed to compute your tax for you. I can only tell you you're going to have some, and I can tell you what the tax rates are, but your CPA is going to have to be the one to tell you how it's going to affect your tax picture. But that's where I can help your clients to kind of walk through that. In addition, I think I'll send you this too, is would you prefer a link or a PDF for a document to compute gain? Now it has our name all over it. So if you provide it, don't ever compute it, guys, of course, because you don't want to be doing accounting. But I think I'll send it as a PDF.
You don't want to be working outside the scope of your license.
Nope, you don't want to go beyond the scope of your license. So
Yeah, if you could send it as a PDF, that'd be great.
I'll send it as a PDF, and then you can forward it to the client. They can do it themselves, and it's got our name on it, so that you're not the one that's you're not the source. You're the source of the source, which is what you want to be. Okay, and so let's talk for a moment on capital gains. Capital gains are not the same as the proceeds of sale. This is probably the most misunderstood part of real estate in general. Okay, I've got a question. Bobby. Hi, Bobby. I recognize you from another class. What if it's inherited property? Is there a different tax amount? Yes. Normally, inherited properties are going to get a stepped-up basis, and the tax goes away. You have to inherit over $11.2 million worth of property before you start getting taxed. So when you inherit a property, usually the tax goes away. There's a couple instances in which it doesn't, but for the most part, when I inherit property, the tax is going to go away. And so if I sold it right away after I inherited it, I would have no taxable event. But the longer I hang on to the property after I've inherited it, if it goes up in value after I inherit it, then often a 1031 exchange is necessary to help defer any tax that accrued during the time I owned it after I inherited it. Now, in our current market, because things are going up in value rather quickly, there'll be probably significant enough gain in a property I inherited a year ago for me to need to do a 1031. If I inherited it last month, probably not. Okay, so it's worth a conversation. I don't mind having a conversation with your client, even if they end up not doing a 1031, just to help them make sure that they don't have a taxable event. Okay, so where were we? Oh, capital gains. So capital gains not the same as proceeds of sale, and your clients get this confused all the time. When we start talking capital gains to your client, usually the client will say, "Oh, well, I owe this much." Okay, capital gains has nothing to do with the loan. Nothing to do with the loan. When you compute capital gains, I'm going to take the number that I paid for the property, and I'm going to take the number I paid for the property against the number I sold the property for, right? That's the first thing. Proceeds of sale is not like this. But before I do this subtraction, I'm going to have to take away from what I bought the property for any depreciation that I took. Now, most clients understand depreciation. Every now and then I run into some that don't, and I know a lot of real estate agents that don't know about depreciation. It's cost recovery. It's money I don't have to pay taxes on when I own an investment property. Okay, but when I took depreciation during the years I owned it, if I sell it, I have to now pay those taxes I didn't pay on that amount. Back to Uncle Sam, it's called gain by unrecognized depreciation, and it serves to reduce my basis. Okay, so if I paid $100,000 20 years ago, that depreciation is going to make my $100,000 more like 50 or 60. And that's what gets taken away from the new sales price, not what I owe. Okay, now if I added improvements, like if I remodeled the kitchen, or if I put on a brand new roof, or I completely replaced the flooring with tile from carpet, did some high dollar improvements, I can add those to my basis. So the basis, what I paid for the property, plus improvements minus depreciation, that's called the adjusted basis. That gets taken away from this new sales price that you, the agent, have now listed and sold the property for. That's what capital gain is, not what I owe, okay? And I can tell you, I've had this conversation with 120,000 of your clients explaining that no, you don't owe money on what your net cash is. You owe money on what the government deems your net profit in capital gain is. Totally different number. And that's one of the things I do when I'm putting your cats together, putting your ducks together, making sure it looks, walks, and quacks. When they say, well, I don't have much gain. I'm going to sell it for $525 and I owe $495 on it. No, what did you pay for the property? What? What do you mean, what did I pay for? I can't even tell you how many times I've had this conversation, and then they want to shoot me, like I shoot the messenger, because all of a sudden they realize, what? I have all this gain. I'll use an example. This was a customer that they bought a property back in the downturn, well, right before the downturn, and they paid $350,000 for it. It was now 10 years later, and they're going to sell the property now at $350,000, right? We have no gain, they told their agent. We bought this property, we rented it out for 10 years. We're now right up to the value where we bought it, so now we're going to sell it at $350,000. We don't have any gain. Bought it for what they paid for it, right? They're going to sell it for what they paid for it. Wrong. You have 10 years of depreciation that you took that is going to create gain for you. Now, you don't have to tell them that. What you do have to tell them is talk to me, because I'll tell them that. I'm a certified specialist. I get to tell them, hey, no, you've got this. You need to talk to your CPA about how much this is, right? Well, they went with this agent. They listed this property with this agent, and they went right up to literally 6 days before closing. And the agent called me up and said, Kandas, have they talked to you? I said, yes. I explained what the depreciation was. I explained to them they need to talk to their CPA, right? They hadn't talked to their CPA yet. Finally, 3 days before closing, what do you think they did? They talked to the CPA, and the CPA told them they had $60,000 in unrecognized gain by depreciation that they would owe Uncle Sam when they sold that property. They thought they were going to take all of the money that they made and remodel their home with it. Okay, well, they had $60,000 less. And so now they came back to me and said, well, we don't want to do a 1031 because we don't want to buy another rental. I said, then be certain you know that you don't spend that money on your own home, because you're going to owe it to Uncle Sam next April. Okay. What can you say? They could have found out way beforehand and had maybe a totally different approach. And there's other ways that they could have handled that. So real common. So I've got a nice long question here. I would like to share that my brother had an experience in 1031 Washington. He sold a condo, wanted to purchase a duplex. And this was from Wendy. Okay. Unfortunately, he was given incorrect advice from, the lender. And at the last minute, they required a larger down payment due to investment loan, and the timeline expired. Oh dear, and he had to pay taxes on the condo. The lender was recommended by an agent. What's your advice to avoid this scenario? Great question, Wendy. My advice to avoid any kind of crash and burn in a 1031 exchange is, number one, make sure your client is talking to a certified exchange specialist. There's only 106 of us. Okay. If they're talking to a lender, or they went online to look at some information, or their accountant is another. Hopefully their accountant is familiar with 1031. They can be talking to their accountant. Okay. But from a 1031 standpoint, whatever the lender said, they probably said they could buy it like a primary, which would have messed up the exchange. Okay. So especially if you got a loan as a owner-occupied property, that's not what a 1031 is. You're going investment to investment property. So I'm not sure if that's how it crashed and burned, but could very well be. Wendy, did you want to add anything to that scenario, or? No? Okay. Okay. Yeah. There's so much misinformation out there on the internet. There's misinformation from clients, I got so many stories. What time is it? It's well, I'll just continue. Yeah, just make sure they're talking to someone that actually understands 1031 and knows the rules. Pretty much anybody at IPX is going to be able to help you. Not all of us are certified exchange specialists. I'm in the field as a specialist. So, you can always call me and ask questions. Even if we're not the intermediary, I don't mind helping you. Okay. So timelines, equal or greater value. So obviously, if I sold at 100,000, I need to buy at 100,000. If I had a loan on the property, I have to have a loan on the new one, right? Or I have to replace the value of the loan with cash or some semblance of half of those things, right? Because if I'm selling at 100,000 and I buy at 100,000, well, what if I sold at 100,000 and I had a loan of 95,000 on it? I still have to buy at 100,000. So I'm either going to have to get a $95,000 loan, or whatever loan I had, I have to replace the value of the loan either with another loan or with cash that I come in from outside the exchange. Now, when does that happen? Often, especially when they're selling in California and they've got like a $40,000 or $50,000 debt left on the property, and they need to buy equal or greater in Nevada. Well, usually the property's worth 700,000, 800,000, 900,000, or up to, heck, I've got one right now. It's a single family rental in Lake Tahoe selling at $5 million. Are you ready for that? Okay, right? $5 million. Okay, so, then they have a loan on it of about 60,000 that's left from way back when. And he said to me, do I have to replace the loan? I said, you do, unless you want to either pay taxes on 60,000 of the exchange or replace the loan with 60,000 of your own money, or half and half, however you want to do that. Because remember, equal or greater. If you always remember that, you'll never get tripped up over the loan issue. The third issue we get is the equity has to be equal or greater. So equal or greater sales price, equal or greater equity, equal or greater loan is what's going to balance your exchange. What do you mean equal or greater equity? Whatever cash. Now we're going to go back and talk about that net proceeds, the cash. Whatever the cash is, that has to be the down payment on the property or properties that I'm buying. Otherwise, I'll pay taxes on any cash that I don't move forward in the exchange. Now, lately, I'd say this year, I had more partial exchanges than ever in my 23-year career, people needing to take some cash out and then let the rest of the cash go forward. In some cases, it was $10,000. In other cases, it was more than that. I think the most I had was in Vegas. It was a broker. He sold a rental and he took $180,000 in cash. He's paying taxes on that, and he left the remainder going forward. Teresa, did you have a question, hon? Or were you just twirling it?
I was twirling my hand, but I do. Does this relate to flippers at all? People that.
Yeah, flippers are not holding for investment.
Okay.
They're holding for resale, so they don't qualify for 1031. Yeah, good question. So I had a client who did a reverse 1031 several years ago. I had no idea how to assist him and was thankful for the exchange intermediary. That's awesome, Vandana. Yes, reverse exchanges can get a little complicated. And at our company, IPX, we're a full service company. Not every company will do exchanges, but reverses. But we do reverses, we do build to suit, we do simultaneous, we do the delayed, we do all of them. And reverse exchanges can get a little scary, but yeah, just so that the rest of you know what we're talking about, in a reverse exchange, you get to buy the replacement property first and then sell the relinquished property within 180 days. You do have to have the intermediary engaged on the purchase before you do it. I have had people call me and go, well, we did a reverse. We bought this property last year and now we're going to sell the one. I go, no, you have to had us involved when you bought it, and then you only have 180 days to sell the one that you're going to sell. So real handy tool right now because we don't have that much inventory and people want to lock up that buy side first. So, okay, so now the last thing I wanted to talk about before we're done was the marketing aspect. How do you get a hold of these, clients, because you want these multiple commissions? I would, first of all, you can approach Teresa and get lists non-owner occupied properties. Okay, the non-owner occupied properties are going to be one of two kinds of properties. They're either going to be a second home, or they're probably going to be a rental. Very rarely are they just a property sitting there, okay? So if they're a rental property, now there's a prime candidate for a 1031 exchange. And Teresa can, provide to you lists of these non-owner occupied properties. Now, if you want to run these like a farm, I know back in the day when I was doing a lot of training for agents for marketing for 1031, I would tell them, if you're going to do a farm, pick and choose what you want in your farm. Do you want to farm non-owner occupied properties that are more than 20 years old, or do you want newer ones that are like maybe 10 years old or less? Do you want properties that'll be easy to sell, like 3-bedroom, 2-bath, 2-car garage minimum? Or do you want to, end up with a 2-car, or a 1-car or no garage, or, pick and choose what your farm is going to be, because if you try, and Teresa will nod her head if you just say, oh, give me all non-owner occupied properties in Las Vegas, you're going to get, 20,000 lists. You want to nail it down to, what do I really want to market? What do I really want to work with here?
I just also want to caution everybody that if you intend to have like marketing strategies around 1031 exchanges for investors, that you have some, like, maybe put Candace's information, get it approved by her before you say you could qualify for a 1031 exchange or something, because again, you don't want to be acting outside of the scope of your license. So just be very clear not to do that in any of your marketing to these potential clients.
And what I will do is I will send what I call an introductory email that you can forward. So if these clients respond to you and go, hey, I want to know more, then you can just say, well, here's our expert and just forward the email to them, and make sure that you include, and guys, when you do that, it would be great if you let me know that you've done it, and copy me so that I can open a file on my computer and forever link that client with you. Because that's what's going to happen, is they then call me, or if they email me, right? And I always ask, how did you hear about me? And if they say it was Wendy, if it was Bobby, then I'm going to link them together with you in that email response so that you can see what I'm saying to them, and you can see that they're following up on your lead. And that's real important to me, because I know I just know from back in the day, and like I said, I teach marketing classes as well, but you want to be able to keep that client linked up with you. And I loop you into the conversation so you can see what we're talking about. That happened recently with someone. They sent a client to me, and it turned out she was wanting to sell an investment property in California and buy a primary residence in Nevada. Well, it's not a 1031, but because I linked her back with the agent and I sent my response back, and the agent responded back, well, I can help you with that still, blah, 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 right? They still got a commission. So that's why I do that. I always link the agent in together, because I know that it's important to you guys. You spend a lot of money marketing, and I want to help you be successful at it. So that would be probably the end of an hour of introductory 1031s. I'll open it up for questions. Yes, Victoria. Oh, unmute yourself, hon.
On a business where they have the business and they own the house and land, and the business is run out of that, the business is zoned commercial, the sale of the actual, and they're selling it all together, would the actual value of the business be separate from what they could do a 1031 on the actual value of the home and land?
Exactly. So the real estate part would be 1031 exchangeable. The bulk sale, the business part being the fixtures and equipment and any inventory, would not be 1031 exchangeable, and neither is goodwill.
Okay. Yep.
So absolutely. Great question, Victoria. Who else has a question for us? Okay, so I'm going to do a couple things. Vandana is going to, am I pronouncing your name correctly? Please tell me.
It's Vandana.
Vandana. Oh, that's beautiful. Okay. Vandana is going to send me your names and emails, and I'm going to send you an introductory email. I'm going to do it separately so that you can forward that to your client. And then I'll send you another email with attachments of what we talked about today and some other things. And in that second email, I'm going to ask and beg you all, please, and please give me Teresa and Vandana, everybody's email, please, because I need you to go onto Google. I will make it so easy for you. I will give you a Google link to go on and say wonderful things about 1031 training by Kandas, because I need to prove to my bosses that spending these hours training agents is something that we need to continue to do. And they're on my butt all the time saying, well, give me some Google reviews then, Kandas. Okay, so please click on the link when I send it to you and just give us a 5-star, yay, great training. And, that way we'll continue to do this. So.
The other thing I was going to say is, because we're recording this and we're going to put this on our elite trainings on YouTube as well, so that in case anybody who is listening in and wants access to those, you can actually get access to the paperwork that Kandas is going to be sending by getting in touch with me.
Thank you, Vandana.
Yeah.
Vandana.
Vandana.
How do you pronounce your last name?
Bala.
Bala. Vandana Bala.
Yep.
Awesome. Okay, so what else? Are we wrapped up? No other questions?
I think so, but so I made you a host. If you leave, then it'll cut.
Am I a host
off.
again?
You are a host again. I do need,
okay.
I am seeing here that I've got email address for Vincent. I think that's Vicente Gallardo. I've got an email address for Wendy. Jose and Jeff, if you could just put your email address in the chat, that would be awesome.
And then I can get you all the stuff.
Yeah. Everybody else
Awesome.
is good to go. Kandas, if you want to make me a host, then I'll end it when we're done here.
Make host. There we go.
Thank you.
Okay. So we never did figure out how to do the co-host thing, did we?
Nope.
Nope.
I think it'll probably go on for the next class that I have, because
maybe
I did make a change in my settings, but we're already in this.
Well, you're not the first one to note that option went away, as I've seen. That's happened a couple times. I'm just really pleased that this worked like a normal Zoom, because earlier this week I had 2 of them that were so, oh my God, they crashed so badly. It was horrible. Couldn't see anybody, that would hear me unless I called in on the phone. And there was these little tiles, and I had absolutely no controls whatsoever. It was just crazy. So I'm really glad that we got to see everybody's face. Nice to see you again, Bobby. I don't know that I saw your face the last time you were involved. Nice to meet you, Wendy and Victoria, Vandana, and Teresa. Nice to see your face. We've been talking back and forth for a while. So I'll hang for a minute or 2 with Vandana in case anybody has additional questions, and look for my emails.
Perfect. And I'm just looking for Joe. I think he's the only email address I don't have. I've got Jeff's. I have Jeff's, Vicente's, Wendy's, Victoria's, Bobby's. Just need Jose's. ROBLEDO. I can look it up. Does anybody have any questions?
No.
Awesome. All right. Well, then I'm gonna end
See
this.
all your beautiful faces later.
Take care. Thanks so much for doing this.
You're welcome. Thanks for inviting me.
No problem. We'll see y'all later.
All right,
Bye. Well, I can't find where to leave the meeting.
I got you. Bye.